Good afternoon, everyone, and a warm welcome to the 19th edition of Global Webinar Series Global Audit Practices Navigating US Standards. Whether you are a seasoned audit professional or just beginning to explore the dynamic world of global audit, you are here for an information packed session that promises to elevate your understanding and spark new ideas. This session is aimed at strengthening the capabilities of Indian chartered accountants, familiarizing them with US auditing standards, requirements, and best practices, thereby broadening their scope for international engagements. In parallel, the webinar provides the professional community with valuable insights like practical guidance and the necessary tool to effectively understand and adapt to the evolving global environment. Today, we are joined by the true industry expert, CA Yogesh Kumar Singhania. Many of us may already know him as a thoughtful leader, but those who are new to this work, CA Singhania brings a wealth of experience across Indian and international audit arenas. His deep understanding of both Indian and US auditing standards, combined with a knack of making technical topics both accessible and engaging, ensures us that we are in extremely capable hands. Let me give you a taste of what we have in our store today. We will be dividing into the core differences between Indian audit practices and global standards like IFRS and PCAOB, looking at what makes local approaches unique and how Indian professionals can upskill cross border engagements. We will demystify concepts like auditors' independence, documentation, and internal control expectations, as well as practical topics such as career opportunities in global audit, books and resources every auditor should have in their library shelf, and how automation is reshaping our field. But it isn't about the technicalities. Expect interactive discussions, real world scenarios, and opportunities to reflect on how these topics play out in our daily work. Whether you are curious about how US Sarbanes-Oxley Act compares to Indian Companies Act, or you want to concrete steps to level up your knowledge of IFRS and PCOB audit, this session will deliver a true blast of knowledge. So fasten up your seatbelts for a lively, confidence boosting, and inspiring session. We invite you to listen, engage, and ask those burning questions as we explore the ever evolving landscape of global audit with CA Yogesh Kumar Singhania. Over to you, sir.
Yeah. Thank you, Ankita. Give, give me a thumbs up if you are able to hear me.
Yeah, you are audible, Yogesh.
Okay. Yeah, thanks everyone, and thank you the Global Udan team who has organized this series for an expectation from today's seminar. Just want to keep it light regarding the uh, understanding of the auditor's job, what we are doing in today's scenario, as well as how this country, Indian country, has becoming advanced in our approach to understand as well as to uh, share our experience with the not just the Indian auditing standard, but also understanding and gaining knowledge from the US as well as other countries auditing standard. I remember the time when in 2008 when I cleared my CA. Immediately after that, I have joined one of the global firm, and that was the time when many of the big four firms and global firms were setting up their offices in India. So that was the time when the companies and the firms, US CPA firms, UK, European and Australian CPA firms were setting up their firms in India. That time has significantly changed the momentum. We have learned a lot. The CA community has joined a lot of uh, these offshore units of the CPA firms and understand their they have expertise in their knowledge about auditing. So We have learned a lot from all these things, and I would like to share my experience with all of you during these sessions. So just let me know if you have any questions. We have a separate technical round of questions at the end of this session, but I will try to give a brief understanding of how does the different global audit practices work, and what are the different auditing standards, how they are similar as well as different from Indian auditing standards, what are the regulators, how do they regulate it, what are their inspections, what are their findings, and how do we can improve ourselves as a professional in the auditing world. So with that, I'll move it. In case if anybody feels any question, please note down their questions. At the end of this session, we will try to take your questions. With that, I'll move to the presentation. So the objective of this webinar is to provide a basic understanding of global audit profession, and creating awareness about the opportunity in the field of global audit, basic overview of Indian and US auditing standards and regulatory environment. So that is the objective. This is a very small session to go through the overall global audit scenarios, but we will try to cover the significant part and the important things of auditing standard from this session. Agenda is, first we are going to understand what is the audit, what is the auditor's role in current scenario, how it is making significant changes, and how can auditor do audit from within India to the global audits. The second topic would be why the profession of audit is making more importance in nowadays. Third, we will see what are the key audit requirements in India versus US. Then after we'll see what are the different auditing standard in India and US. We'll also look into the NEFRA and PCOB inspection findings, and we'll have the question answer. So that's a brief agenda for today. So the moment we speak about auditors, people have different image in their mind. They think that auditors can do and wear the multiple hats. They can also do the accounting, they can do the tax, they can do audit, they can do advisory, consulting, payroll, different kind of services auditors can do. But truly speaking, auditor is a specialization job, and the definition of audit as per the international auditing standard and US standard and Indian standard is the first thing we need to see in audit is being independent. So being independent from whom? From management, from accounting, from preparation of books and records. Auditor is expected to be independent. Why do we need an auditor first of all? Auditor provides assurance on the books of accounts, and that assurance need to be independent. If it is not independent, it is biased. Nobody is going to trust and rely on the opinion of the auditor. So the first expectation of auditor is to be independent. Then second thing, what do we audit? We audit financial statements and financial information. So generally financial statement includes your balance sheet, profit and loss account, and cash flow statements. Nowadays, we also see other comprehensive income statement, which is a part of IFRS, Ind AS, and the US accounting standards. So many companies are supposed to provide comprehensive income statement. These are the generally four statements which become part of the financial statement. Over and above these four statements, we also have schedules which are part of these statements. We have annexures, and there are some other statements which are also requirement of different regulations and laws in respective countries which become part of this financial statement. So auditor need to be independent. They audit financial statement, and information to express an opinion whether the financial statement or information uh, is true, giving true and fair view in respect of the material financial statement. So we do provide an opinion whether the financial information or statement is true or fair. So we do not provide an absolute assurance. We provide a reasonable assurance that these are free from material misstatement. The word material and the misstatement we'll talk in the later part of the presentation. So audit is a little bit different in the opinion of law and the standards compared to accounting and taxation. It is a specialized job. Account auditor need to be independent compared to the accountant and taxation services. So that's the definition of audit. Nowadays we are seeing there is a increased demand of audit profession, and not only just in India, even in US we have seen the news where there is a shortage of the CPAs and audit professional within US as well as in Europe. So these are basically like we see every day in the newspaper and news that many people who want to join other profession other than audit because this is the most stressful job. Also it takes time to gain experience. Even if you see within India, the length as well as the hard work which goes into completing CA is like massive. So that takes a lot of time, and the results we have seen are like less than 10% of the people those who are entering. So this is definitely one of the profession which requires efforts and which requires a lot of focus to complete the law. Even after becoming CA, government compliances, regulations, and the last and important thing is the technological advancement and changes are becoming so much complex nowadays that the job of auditor is also becoming complex, and the requirement of auditor is significantly increased, not only just in India, even in US and other countries. So these are the few points. Even the financial reporting standards, whether it is IFRS, Ind AS, AS, and the auditing standard, quality control standard, these number of standards are increasing day by day, are putting pressure. Then the regulatory bodies, which includes in India SEBI, NAFRA, ROC, and the other investigating agencies like uh, the financial investigation agency SEBI as well as uh, ED. These are looking into the financial statement and information day by day. Similarly, in US, if you will see, SEC is there, PCOB is there, then AICPA, which is also does the peer review. All these bodies are issuing standard day by day. The task of auditor is increasing day by day. So that makes the profession is the demand of the profession is increasing day by day, and the prospect of the profession are also really great in the coming future. Then we have discussed about the shortage. I have seen on this slide, I've shown some of the clips of the newspaper as well as website, which shows that the shortage of CPA, like the number of CPAs were like 1.7 million, which includes CPA as well as accountant in the US in 2019, which is 10% lesser compared to earlier period. So people, those who wanted to pursue CPA as careers has gone down in US, and that has increased the demand of accountant in US. Similarly, many of the people and the CPA firms are finding alternate resources within India to cover their demand of these auditors. Last 5 years, we have seen a lot of global audit firms are coming to India. They are opening their own offshore centers within India to cover their demand, which is there in US as well as other countries. They are hiring people, talent here, and getting work from the onshore teams to India and getting done work here. So India has become one of the most favorite nation where they are setting up their practices, whether it is includes Bangalore, Hyderabad, Pune, Kolkata, New Delhi, Gurgaon. All these, even in Ahmedabad and Odisha, there are few firms who has opened their offshore units in these cities. So that is giving a lot of opportunity to our CAs in India to escalate their career in the global audit firms, as well as there are many small firms who are sending work not just to their own centers, but they are having tie-up with the local Indian CA firms to send their work and getting done their work from India. So this is the list, and this is not exclusive list, but I know through some of my common network and the friends who can show these are the firms which has started recently in last 5 to 10 years their operations in India. Over and above these CPF firms, there are also many investment bankers as well as custodian and hedge fund and private equity fund managers who have opened their offices in India. So what happens is that many of the investment banking firms they get their preparation of financials from India. So now not only their financials are prepared in India, but they are also audited in India. So these are also other areas where CAs can find opportunities in the coming days. Already they many of the banks have started their offshore practices here. So there is a not only within the firms but also in the industry, people can leverage their career and make me build their expertise in the area of the audit. So these are the field where we can see opportunities coming in the next few years. Now the next topic for our uh, discussion would be what are the different requirements within India and US. So we can have a comparative look like the governing law in India for companies is Companies Act 2013, as you know. In US, there are two types of companies. One is a public company, or we call it a listed company, which is governed by SEC, Securities Exchange Board, and the others are private companies which are mostly accounting and auditing job is regulated by AICPA, which is equivalent to our CA institute in US. So the public companies audit is also regulated by other than SEC. PCOB is the body which also look into the auditor's role, similar like to what we have NEFRA here in India. The applicable statutory audit in India, other than the Companies Act audit, respective act of that entity under which it is registered is regulated. Like LLPs are regulated under LLP Act, societies are regulated under Societies Act, then partnership firms are regulated under Partnership Act. So we have different act for different entities. Similar way, United States also have different regulations to regulate. For companies, mostly they have like PCOB who is regulating the auditor's job for listed companies, and AICP is the body which regulates it. And then they also have different states under which they are registered, that companies. So each state has their own department to regulate that these companies. Types of audit, we have different type of audit which include tax audit, GST audit, cost audit, and as well as statutory audit. We call it mainly for the Companies Act. In US, mostly for public companies, there are integrated audits which is regulated by PCOB and SEC, and there are non-integrated audit for private companies which is regulated by AICPA. Auditor's qualification So you need to be a practicing CA registered with the CA Institute to be in India, whereas in case of United States, you need to be a licensed CPA registered in the state for which you are doing the audit of that particular company. So CPA is like US has around 50 countries, 49 countries, sorry, states. From that they are issuing license. You need to be a CPA licensed for that particular respective state from which you want to do the audit. Auditor's appointment in India happens mostly in the case of AGM. The first auditor is appointed by the board of directors and within the 30 days of the incorporation, and then it happens on AGM. Whereas in case of United States, mostly public limited companies, audit committee is there that appoints the auditor, and the they have independence rules, so rotation is also mandatory in case of public listed companies of the auditor as per the rules of the SEC and PCOB. In case of India, also we have now the rotation plans. Even for non-public companies, also many of the firms follow the rotation of partner as well as manager. Depends upon 5 to 7 years, depend upon the nature of the company, whether it is public or private. Every 5 to 7 years, there is a change in the partner. And also nowadays, the company that are coming with the rotation policy, so it might be change of auditor firm as well. So both rotation of partner and rotation of firm are there within India as well as in United States. Internal controls. Earlier in India, there was no separate reporting on the internal control. It was part of the statutory audit itself. But now, Companies Act has also made it mandatory by the auditor to report on the internal control, and a attestation to be made by the CFO or CEO of the company that all the controls which are related to the financial reporting are designed properly as well as operating effectively during the year. So that requirement has come recently. There is a threshold above which this requirement is applicable for both private and public companies. And within India, similar case, even for US also, this has come into picture after the Sarbanes-Oxley Act in 2002, which made the introduction of the PCOB in 2004. So after 2004, most of the public limited companies are supposed to report on the internal controls of the companies within US. So earlier India was not reporting, but similar on the line of US, we are seeing the report on internal control. Financial reporting framework or accounting standard, we can say India has its own Indian accounting standard, which called Ind AS, as well as AS for the companies which are smaller. These are in line with the IFRS. Whereas in case of United States, we have US GAAP or accounting standard codification, we call it ASC. So those we will understand in later part of the slide. Standard setting body within India, it is ICAI is the standard setting body. Nowadays, NAFRA is also uh, publishing their own standard, looking into the CA Institute's standard. Similar way, PCOB as well. First, AICP issues the standard, and then PCOB makes amended standard or issue their own standard. PCOB standards are more rigid and more descriptive in their approach, rule based, as well as more in focus on the more in-depth auditing standards compared to the AICP. Codification name, Indian auditing standards are called SA, Standard on Auditing. PCOB standard are called AS, Auditing Standard, and the AICP standards are called AUC, which is like a codification of auditing standards. So these are also called GAS, Generally Accepted Auditing Standards. So mostly two set of standards in US, which includes PCOB as well as AICP standard. In India, mostly essays are there. NAFRA is might suggest and come up with their own standard. As of now, auditing standards are there. Guiding principles. So Indian accounting standards, IFRS accounting standard mostly are principle based, whereas US accounting standards are more of rule based. So these basically are more flexible. Indian accounting standard and IFRS, they are more judgmental, whereas in case of United States, these are more like even the thresholds are defined for wherever the judgment need to be used. So they are more rule based standards. Hmm. Then the key auditing concept for Indian and US auditing standard, we have seen that both the standards are risk-based approach standards. I remember we used to have auditing where before 2004, when we used to call the controls the compliance testing and substantive testing, and there was less focus on risk and more focus on the testing. Now the approach has changed little bit. The focus is on the risk assessment more, and then decide the auditing procedure, tailored auditing procedure according to the risk. So that system has changed a lot of approach in auditing compared to the previous regime. And similar way for PCOB also focuses on a lot of risk assessment. The risk is something what could go wrong, so that assessment is happening at even at client acceptance level, engagement acceptance level, execution, sorry, planning of the audit, execution of audit, then analyzing, aggregating, and reporting stage of the audit. So all these stages, all 4 or 5 stages risk assessment happens. Audit steps and procedures are designed according to the risk assessment. This has been a significant change in the approach, not only just in US but even in India for the profession overall. If you see the auditing standard compared to AICPA, PCOB focuses more on the risk assessment standards. They have even auditing standard on how to understand the business internal control and the business cycle. So they have designed their auditing standard more on. Auditors report, our format is mostly coming from uh, auditing standard itself, whereas in case of PCOB and AICPA standard, they they have standard on the modified opinion, as well as they also have what are the things which should be there in the audit opinion. So also there is a report framework for integrated audit which is given in the PCOB. There is a separate standard for that as well. If anybody can tell me how many types of audit report. Mostly these are divided into clean audit report and modified audit report. Modified audit report can be a qualified opinion report, it can be a disclaimer, or it can be an adverse report. So within these buckets, you will see the audit reports. There is a standard in PCOB which talks about what are the things you need to state and mention in the audit report when you are issuing a modified report. Similar way, we also have seen the CAMS, which says KAMs, the key audit matters. This is called CAMs in US, which is critical audit matters, specifically for the public companies and the private companies which are above certain threshold which are coming into picture. This is something which we call it that we are reporting on the matters which where a lot of judgments, auditor's judgment and professional judgment is involved, and there is a lot of risk of misstatement might arise, significant risk of might arise. There we need to define what is the critical audit matter, why we have selected it as a critical or key audit matter, and what are the audit procedures we have developed to address those risks associated with these critical audit matters. That will be one of the significant part of the inspection in the coming time of come in future, specifically for NEFRA as well as a PCOB. This is something which we are telling ourselves to our regulators that these are the areas where we might slip it. So this is something we everybody should prepare it and read it. Auditors' independence is something which we have discussed. It is critical, but I'll tell you what are the guidance available in India. The guidance are: first is companies law, which defines auditors independence, like what are the financial interests should not be there. Second, that ethics manual of CA Institute, that is defining how an auditor should be independent. NEFRA is also defining nowadays what should not be there to which can hamper the independence. In case of US, you have PCOB standard on the independence, you have SEC standard on the independence, and then you also have AICP standard on the independence. So there is a overall over and above, the firms also have their own independence standard. So whatever is the most restrictive in the nature is followed by the firms, and generally not only independence from the client. If you see, there are news in the paper as well as news in the media that independence within the audit team might hamper the independence of the auditor. So there are cases around that as well. So audit independence has always been significant. Applicability, now essays are mostly applicable on all kind of audits, not just the company's audit, but also non-company audit essays are applicable. PCOB auditing standard are applicable only on public companies. AICP standards are applicable on non-public companies as well as other entities. NEFRA and ICA are the oversight body, enforcement body for India, whereas PCOB is for public company, AICPA is for private companies. IFRS and Ind AS are mostly converged. Ind AS are mostly converged and derived from IFRS. US GAAP are also many in many cases are similar, whereas IFRS is on principle based, US standards are mostly on rule based. So there are still few differences in the accounting standard in case of IFRS and US GAAP. Earlier there were a lot of significant differences, but in recent years even the US GAAP is coming closer to the IFRS. Indian auditing standard versus US auditing standard. I'll go through each and every, like mm, I'll try to give little bit insight on these standard. Overall objective of Ind AS is, sorry, Indian auditing standard is to express an opinion on the financial statement. Responsibility of maintaining books of accounts and internal control stays with the management, whereas expressing opinion is the responsibility of is the responsibility of auditor. They need to be independent and deciding materiality, that the financial statement are free from material misstatement. That is the most important objective. So similar way, US also has similar objectives. They have more defined on the role of the management, specifically in the public company. Maintenance of internal control and operating effectiveness of the internal control is also responsibility of management because of the PCOB standards. Audit documentations, like we need to have permanent file, current file. We need to have documentation that which shows the nature, time, and extent of audit procedure. Same is the case in the US auditing standard. We need to make sure that the audit evidence are supporting our audit conclusions. Then there are timelines in US and Indian auditing standard where we need to archive the file for future reference purpose. Generally, it is 60 days in India, whereas in US it is 14 to 45 days, depend upon the size of the company. Over and above, there are internal firms rules which focuses on archive earlier than these standard mentions. After archival, nobody can change anything, and there will be inspection finding. We'll see that after archival also many people have tried to change the. Then there is a maintenance requirement of these audit documentation up to 7 years in US, and in India, I think income tax department as well as other department also want to keep it for up to 8 years, but auditing standard also required similar to like 7 years. Fraud related in US, this is something which I've seen different from US, that there is a fraud discussion happens within the audit team led by partner, engagement partner, and that fraud discussion happens at the beginning of the engagement, and even the small team member is also given equal weightage during those discussions. They are listened properly. People discuss what could go wrong, what is the where the fraud can happen. So those fraud discussions are very intense. They are properly documented. In India also nowadays the standard require the fraud discussion happens, but we generally don't document that frequently, which happens in India, in US. Then over and above, there are fraud inquiries to management. There are also independent fraud inquiries by the auditor from the random employees of client. Then I think one of the important thing every should understand is that fraud, even after audit, there might be a fraud. Fraud is not, we are not providing any assurance that there is no fraud in the audit. Still, we are responsible for fraud. How? The most important part is that the standard makes it mandatory for us to design our audit procedure in such a way that the risk of fraud is mitigated. We might detect the fraud. We should design our procedure in such a way. So we might specifically mentioning in our engagement letter as well as report that there is we do not guarantee there is no fraud, but still we are responsible for that. Then we have also responsibility to report if we identify or suspect any fraud to those who charged with the governance as well as to the central government in case of India. Communication with the governance, we in public listed companies, we also have audit committee in India. Similar way, we have audit committee in US. Those who are charged with governance, we discuss at the time of accepting the engagement, communicate any significant deficiency or even material weakness to the those charged with governance. If any fraud is identified, we are supposed to discuss with those. Scope, any limitation on the scope, we are supposed to communicate with those who charge with governance. Risk assessment, I think I've already discussed. There are different type of risk assessment which happens at different level of the audit. US PCOB auditing standards even defined how to prepare the flow charts, how to identify risk of material misstatement, which we call ROM, need to discuss the assertion at each account balance level or class of transaction. These are some of the jargons which I am using from the auditing standard. Many of you who have done the audit might be familiar, but yes, these are the we need to do risk assessment at each account balance level. We are need to do assess at assertion level and class of transaction level. Risk assessment will be at before accepting client, after accepting client, planning, execution, and reporting. At all level risk assessment is there. This is something which even a lot of inspection findings are looking into it. Audit evidence, external, internal audit evidence, more weightage given to the external audit evidence. Sufficiency and appropriateness of the audit evidence, which is like quantity versus quality. We need to ensure that the quality as well as the quantity of the evidence which we are uh, obtaining from the client should be addressing the risk of audit. Then relevance of the audit evidence is very important. All these I think are similar in the nature. one of the another standard is management representation letters standard, also is one of the audit evidence, but it doesn't is not the substitute of auditing procedures. So that we also need to keep it. Actional confirmation, one of the important standard for the people who are working on the global audits. I have seen this standard has changed significantly recently in the PCOB because of the electronic confirmation. There are many third party vendors who are providing service of electronic confirmations. So we are using those from India. We are sending confirmation from India on behalf of US clients to the third world, which is like Europe, Australia, people having their custodians and somewhere else in the world. So this has become very significant, and the auditor should have control on sending that. And we have seen guidance coming from PCOB that when you are using third party vendors as a external audit confirmation, you also need to check their system. So we have seen uh, inspectors asking SSA 16 report on these third party vendors. Analytical procedures, three level. One is at primary preliminary analytics, then substantive analytics, and third is concluding analytics. Preliminary analytics are risk assessment procedure. Substantive analytics are like audit procedures, and concluding analytics are again substantive procedures. Substantive audit procedures were not very clear initially when the PCOB comes, but this is the another area where PCOB has challenged the work. We need to develop our own independent expectation as an auditor for the account balance or class of account transactions. We need to compare that with the account balance. Need to see the disaggregation at which level we are developing the expectation, how we are developing our expectations. So these are the areas where PCOB in the year from 2010 to 15 has issued lot of comments. Also, substantive analytical procedure alone is not sufficient in significant risk areas or fraud risk areas. So that is another thing. Analytical procedures, specifically in case of revenue, alone is not sufficient. And this is something where we will learn a lot in the practical life when you are going to develop independent expectation. Many times we see that people develop the expectation from client data, which leads like circular auditing. So that is not allowed in auditing standard. Audit sampling, mostly we cannot do 100% audit, so we need to do sample both in substantive testing as well as in controls testing. Then we have option of choosing statistical sample or judgmental, or we can say random sampling. If you are doing statistical sampling, there are limitation. It works only when the population is homogeneous. It doesn't work, and if you are also using judgmental or random sampling, then there is a risk that whatever results you are getting, you might not extrapolate or project those results over the entire population. So you need to be very careful when you are selecting the sample method. What would be the impact of selecting that sample method? With whatever method you are selecting, that should be the representative of the entire population. Then related parties, most of the fraud, if you see in have one common thing is that either they are done through related party transactions, or they are done with internal controls labs. So that is one of the significant areas. Mostly Indian as well as US auditing standard focuses on how do we ensure that completeness of the related parties are identified. How do we ensure that complete related party transactions are disclosed? And how do we ensure that the disclosures are valued at proper valuation? So these are the three focus area of this standard. We need to identify the parties, we need to identify the relationship, and we need to also ensure the completeness of the transactions which disclosed, and whether they are done at arm's length price or not. Going concern, another area of very often you will find inspections. Going concern, auditor is supposed to, we have a basic convention that the business will go on, and then based on that we audit it. If the going concern is doubtful, then the way of accounting may might which we are using might not be appropriate. We might need to go into liquidation accounting. So what is going concern? That business will go on for a particular period. If there is a doubt on that, then we need to change the accounting. And many times we have seen that companies have losses, and management has given assurance that they are getting any funding from holding company or subsidiary company like that, and there was no qualification about, or even there was no disclosures about. So going concern is another favorite area of inspection for auditors. The role regarding going concerns, the standards are very clear, given threshold in case of US standard. In case of Indian standard, it is still on the professional judgment of the auditor. Written representations, as I mentioned, that management are supposed to provide written representations to the auditors during the course of the audit. If they deny anything on that, it is a limitation on the scope of auditors. Audit representation can be taken from the people who are responsible for the business of the entity. Sometimes we have seen challenges that there at the top level there are changes, like CEO, CFO had changed at the time of signing, but there was some else also. In that case, you better go and talk to those who charged with governance. You can have audit representation letter from those. Then the audit representation letter need to be of the date of audit report. And many are the things which are communicated by management verbally need to go into the rap letter, like intention of the management regarding the long term, short term of the investments. Then sometimes uh, discounted with the DCF, discounted cash flow method, we need lot of representation from the management. So there is no alternate audit evidence in those cases. We need to have those things in the audit wrap letter. But having things in the audit wrap letter doesn't make it alternate to the auditing procedures where we can obtain the alternate audit procedure. So as much audit procedure you want to have it, and then have the wrap letter. Using internal auditor, this is another area where there is a significant difference in Indian audit versus the US audit. Generally, I have not seen many auditors using the internal audit works in India, but in US for large engagement, statutory auditors do use the work of internal auditors, but making sure that internal auditor is capable, qualified, independent. First, they need to make ensure that then they are not using the work of internal auditor without reperformance. It is not review, it is reperformance. They need to do certain work of auditor, reperform their work, and see whether any amendment is required in the work of internal auditor. After they make sure that their work can be reliable, they are independent, they are capable, then only you can use the work of internal auditor. Using an expert, it might be expert of client, it might be expert of audit, where but basically we are talking about here expert of auditor. If you are using the expert of client, again you need to see their independence, their expertise, and ultimately it is the responsibility of the lead service partner, LSP, that whether he want to rely on their opinion or not. Even if you are using, auditor is using his own expert, still the lead service partner auditor who is signing the audit opinion, he is responsible. They should look into the assumptions and the data source data where they have taken information from. Everything they are responsible for. Forming an opinion. So we have already discussed that Ultimately, it is the objective to issue whether the financial statement are free from material misstatement. It requires a lot of field job. After field job, whatever findings are there, they are accumulated. Findings might be related to the errors or misstatement, and it might also be related to the deficiency of the controls. All these are integrated, accumulated, and then partner decide whether overall at the pervasive level financial statement are free from the material misstatements. Modified opinion. I have discussed a little bit on this. Modified opinion might be a disclaimer opinion, it might be a qualified opinion, or it might be a adverse opinion. So all three opinion are covered in this standard. In any situation of these, you are responsible to discuss with those charged with the governance. For any qualification, management is also supposed to provide their explanation and statement, and make sure that whenever you are mentioning anything in the audit opinion, you also have evidence of those supporting. US is a very legal sensitive environment, so you can also be challenged, specifically in disclaimer of the opinion. Key and critical audit matters, now they are becoming part of audit opinion. Each auditor is supposed to disclose in their audit opinion what are the critical audit matters they have identified. Why do they think that these are critical? Whether they include significant professional judgment, or they see a significant risk. Then they also need to disclose what are the audit procedures they have applied to address this risk. So this is something we are showing our own work, which is very confidential to the entire public. And anybody looking into those can challenge us that whatever procedures you have uh, adopted are not appropriate. And second thing, that anything which we have not determined as a CAM or critical audit matter might be a critical audit matter for the public at large. So this is something is a very uh, self-explosive thing which auditors has to do it. Reporting on internal controls. In US, all the public company are supposed to report on the integrated. Before auditors attest on the internal controls, it is the management, the CFO and CEO. They are supposed to attest that their company has designed a proper internal control over financial reporting, and they are operating effectively. Remember, these are controls which are impacting the financial reporting. These are not just the operating control, cyber security control. Some of them might also be financial reporting control. You need to more associated with the financial reporting control. And there is a top-down approach when we are auditing the internal control. This basically is like first you will look at the entity level control, then you will go to the specific business cycle control, as well as ITCG control. We will look at it. The most important topic is what are the inspection finding of PCOB and NEFRA during their inspection. PCOB came somewhere in after 2004. NEFRA has come like recently, not more than 5-7 years. Still, they have come up with their reports on the auditor's work. And the best person is someone who learns from the mistake of others. They have made their findings public, and for us to become a better professionalism to look into what are the mistakes made by our colleagues which we can avoid it. So these are the basically pitfalls which we can avoid it. So the first favorite topic of NEFRA and PCOB is internal control. This I have felt that in India we do more audit of substantive testing. Our work is much more than what is required in US for substantive testing, but we do less focus on the internal control. So NEFRA as well as in PCOB both have inspected our records, audit records, and understand that internal controls, they find that either the design was not tested properly, or operating, if whatever deficiency we have noted, we have not reported it to those charged with governance. There are lack of sufficient documentation for auditors evaluation of the company's internal control. Either we do not document it properly, or even if we document it, we have missed the deficiency. Similar case, PCOB is like very, very particular, in-depth documentation of controls, risk, testing of the controls, their frequency, sample selection, IP, everything they are looking into it. Revenue recognition, by default, it is a significant risk. Also, it is a fraud risk, revenue recognition. So every inspector, the first thing they look into is revenue. What are the procedures which are designed? Mostly we see that now there is a new accounting standard for recognizing revenue, the 5 steps revenue. They look into it, whether the big memo, they look into it. Most of the companies prepare memo how they are qualifying for those 5 step revenue recognition. Then their proper cutoff testing is not fine. Failure to address the risk related to journal entries related to the revenue recognition, which happens at the period end or year end. So during even the revenue recognition, we have seen a lot of findings. Audit evidence and documentation, another favorite area. The first finding is that the either archival not happened at time, or there were amendments or changes made after the archival before the inspection. People have also the regulators have also gone into such extent that people, those who are getting the firm training, whether they are using any side materials for clearing those trainings. So that to that extent PCOB has gone into it. Then even documentation are there, but they are not supporting the conclusion. And internal audit evidence are given more weightage over the contradictory external audit evidence. These also there. Then insufficient sampling, like you were supposed to select 40 samples but you have done only 20, that kind of also might happen. So there are a lot of findings on audit documentation. And in US it is say that if you have not done, if you are not documented, it is not done. So most of the documentation question comes from PCOB are related to the professional judgment. For any professional judgment related matter, in US you will be asked to prepare a memo. So that is something which is very particular in PCOB audits, even for AICP audits nowadays. Related party transactions, either the parties were not identified completely, or transactions were not disclosed. Even if it is disclosed, they were not disclosed at the proper value. So these are the findings more in India than in US. Valuation and estimates, we generally use expert, specifically in case of intangible valuations. And we have inspection finding that the experts' work was not challenged properly by the auditor. They were supposed to first look into the qualification, whether the assumptions which were used were contradictory. You are having goodwill valuation, you are having a different growth rate, whereas in the case of brand valuation, you are having a different growth rate. So one company having two valuation and two different growth rates. These kind of something valuation estimates come into picture. Uh, Auditors independence, I have already discussed that there have been a violation of independence. In India, the big talk of the town is like auditor is getting advisory fees or some other uh, engagement fees more than the audit fees. So something these can be also uh, like breach your independence. In US, there are relationship with the client or client personal, even though you are engaging, you are signing their audit report. These kind of issues might also like breach your independence. So there are big focuses on that. Even if you are hiring any person who was previously from the team of your audit, in US you are supposed to have discussion on that in the audit committee meetings, and only if audit committee allow, then only you can take it. Otherwise you are not supposed to hire somebody who has not completed the cooling off period. So these were the some of the topics I think I have discussed. uh, I feel audit as a career. We all have studied audit as a subject, which was very boring. But audit as a career is like something which is very, very, uh, very struggle. We need to do a lot of hard work, but it makes you a person who can apply their own learnings, not only just in the professional life, but also in the personal life, and can become a good professional. So there are a lot of opportunities due to the global audit environment in India for at least for the next 10 years. I feel that the career in the audit will be similar like what was software in 1990 and 2000 period. So this will see a lot of growth. I talk to a lot of my friends, ex-colleague, and I can tell you that many firms are having more than 100% growth in their talent hiring every year. That can has been possible only because lot of global audit firms have opened their doors in India, and they know initially when we were working on the global audit engagement in 2008 and 9, we were just doing the tie-outs. And now you won't believe that the scale and the capabilities has increased so high that people are doing goodwill valuation, people are doing impairment testing, people are doing level 3 investment testing from India. And there are firms who has become so uh, capable that they are giving training sitting in India to the US people. So that kind of, earlier it was cost advantage, now it is a proper capability center. People has known and recognized the value of Indian professional, and they are want to invest in the profession with that. So I'll stop here. I think I try to address a time, and I'll be more happy to engage with the questions and try to answer those questions now. Over to you, I think, Ankita.
Okay, thank you, sir, for your timings and the detailed. We had seen you had explained it very well and in a detailed portion. We'll pause here for 5 minutes to
Yeah.
see if we have any kind of questions. Um, we expect that it should be an interactive session, so request all the participants to please open up and just ask the questions which you have in your bucket. So, one of the questions which we have, sir, for you is we have in India an authority called SEBI to
Mhm.
supervise all listed companies.
Yeah.
That is Securities Exchange Board of India,
Right.
and it supervises all the listed companies, irregularities, and reporting of the auditor. So, what is the role of any supervisory authority or authorities in US regarding all listed company?
Yeah. So similar like SEBI, there is a authority called SEC, Securities Exchange Control Board of US, which looks into uh, all the financials of the listed companies, and they do have authority to to summon or to ask for the information from not only just from the companies but also from the auditors of those companies. So SCC is something any company which has any security, not just the equity, even for that security, if they have listed that security on any of the exchange of US, including the companies which are foreign, like Infosys having listed their securities in US, they can have a authority on those even if those companies are foreign companies. So SEC is the equivalent body. Then PCOB has only power on the auditors. They do not have uh, any role in like day-to-day listing, or they do not have authority on the stock market.
Okay.
Yeah.
Okay, I hope this answered the question.
Yeah.
We have another question which says that now that AI is being used a lot, so how AI can replace us being the auditor? This is one of the great questions which
Yeah.
every CA comes across. Like they have a fear, like how, because of the growing AI, how it can impact our journey in this global scenario.
Excellent question. So I'll say that there are pros and cons of both AI. The
Mm-hmm.
first pro is that as an auditor, we were also struggling with a lot of documents, and we were struggling with the massive samples which we need to test it.
Mm-hmm.
So similar processes will be automated through AI and automations that will reduce our work. We will be able to focus on more on the significant risk areas. Now also think we need to also test the AI. So the client will design their automation in such a way that they want to produce their results and do the accounting based on the AI. So you will see in the future similar like internal controls, you have the auditing standard, you will see auditing standard on AI, you will see auditing standard on cyber security. So that will put more responsibility on the auditor. You need to hire expert of AI and cyber security in your team. So I think after in the coming next 5 years, PCOB, AICP, including ICAI will see standards on AI auditing or automated platforms which are involved in the accounting or financial reporting. So
Absolutely,
yeah,
absolutely. We might see,
yes,
and yeah, it leads to the data security also, because
yes,
when we are using the AI, of course, we are giving the sensitive data of the client on the hands of the AI. So I believe that this is another scenario which is equally important when it comes to data security and the client confidentiality, which every auditor is required to maintain. So while
absolutely.
using it, I believe that we should be careful while using the AI.
The
Uh,
another thing is that there is
yeah,
no audit trial for AI procedures.
correct, correct.
So going behind the system, understanding how the system is working and producing the result, that is something will be the most technological advancement in the field of auditors.
Hmm. So I hope this might have answered.
Yeah.
So another interesting question is,
Yeah.
how do, as an Indian auditors, they can expect the client, like the global client? Like this is really interesting to know for all
Yeah.
those who are practicing, like how to get the clients.
So let's put ourselves into the shoes of client. The client want their task to be completed on time. Their audits need to be completed on time. They want that audit need to be completed with proper auditing standard and efficiency.
Mhm.
Also, they want it should be completed with the minimal resources or monetary cost. So they are looking for these. If
Hmm.
we are able to provide them these options with their data security and reliable service delivery from India, why won't they come to us? They will
Correct.
definitely come to us. However, when they will be first coming to you, they'll be hesitant. They'll be hesitant for what? They'll be hesitant for data safety, first thing. They will be hesitant about your capability and experience. So we need to prepare ourselves in these field that we are technologically safe to get the work from here. Also, we are capable to complete the task which they are expecting, and that is something we need to market ourselves.
Correct.
Yeah.
Correct. So yeah, it requires some of the background activities which we as a CA are
Yeah.
required to do. And of course, when you are addressing to the global clients, I believe that this require abundance of the knowledge and a good team so that all the work can be coordinated. There are
Absolutely.
a lot of the background activity. So
Yeah.
before hitting the global environment, we need to be in line of how the global auditing is done. You should be very pro with the global auditing, of course.
Absolutely.
Yeah. Apart from it, we have one more questions on the line, which
Mhm.
says that can you please elaborate the risk assessment procedures as per the US guidelines?
Okay. So the risk assessment procedure starts before even accepting the client. In US, you will not accept a client just like that. Sometimes you reject also a client. You will
Correct.
do the background check of the client. You will do a legal background check of the directors, there those who charge with the governance. You will see whether you are independent of those client. Are you working on any other engagement other than audit? Are you getting fees which is higher, which is you are expecting fees from the audit? Then also you don't want to do that. Sometimes the management is involved in previous companies or previous engagements which were fraudulent, involved in the fraudulent activity. You might reject that. Sometimes you do not have capacity to serve those clients, like the client is so big that you don't have that much capability of the staff. So there is a risk assessment at the level of client acceptance. After client acceptance, there is a engagement acceptance. So they many people don't understand that once you have accepted client, you can do any engagement. No, each engagement is tested for independence, for risk assessment. Once you are over, then you do the risk assessment at planning level. That starts with reviewing the previous year financials, draft financials of the quarters, the trend review. Then you will also understand the business of the client. You will understand the internal control of the client. You will understand the business cycles of the client. For each understanding, you will walk through their process. These walkthroughs are either documented through the flowcharts or diagrams. You will have risk assessment at each level, that risk assessment from the financial reporting perspective. Then after planning, you will document everything in the APM, audit planning memorandum. Then you develop audit procedures. Even those audit procedures, you will test controls, then you will test substantive testing. For controls also, whether control having any risk associated with the controls, you will do risk assessment. Then you will accumulate all the results and do again final assessment. If I am going to sign this audit opinion, whether there are deficiency, material weakness or significant deficiency, I need to report it. Whether there are misstatement which are above my materiality or planning materiality. So all these discussion will happen, and each and every level there will be risk assessment. Even even after signing off, you will do again a reassessment whether I should do this engagement next year or not.
Yeah, of course. This is
Yeah,
absolutely correct. And
yeah,
I feel that this is the best elaboration we can expect in this
yeah,
case because every business processes have their own set of risk, which
yeah,
we address through by doing a walkthrough with the client. We document the walkthroughs. We go through the substantive analytical procedures, substantive testing, and that's how we address the assessment procedures for risk as per the
yeah,
US guidelines.
absolutely.
So, to proceed further, there is one who asked, sir, from you that
Mm.
if you can share some link to access the US accounting standards. I believe they will be talking about the IFRS. So, if you can share some link over the chat, so that they can access.
So US accounting standard, you can go to AICPA website, and you can also, there is a separate website for accounting standard codification, ASC. You will just Google it and just say US ASC accounting standard codification. It will take you to there, all the accounting standard. One another difference between Indian accounting standard and US accounting standard, that there are accounting standards in US which are based on the industries. So that is something which is unique in US. So you will see first normal accounting standard, then based on each industry there are accounting standard. So
Yeah.
accounting standard codification you can find on the ASC website, and you can also see on the AICPA of US website. And auditing standard you can also find on AICPA website. PCOB auditing standard you will find on the PCOB website.
Okay.
Yeah,
So these are the sources from which we learn.
yeah,
For the chartered accountants who studied through the INDAS or Indian Accounting Standards, I believe that these are the best sources through which you can simply read and see that how the accounting can be done.
yes.
To proceed further, we have one more questions in the queue, which says that can you please name some AI tools for sampling?
So AI can help you in picking up the sample. But before going to sample, you need to understand your population. Also, you need to understand your objective of sampling. What is the risk? Why you are testing a particular audit procedure? Those things cannot be done by AI. So you need to first apply that what are the risk related to the account balance, which assertion you are testing, and you are understanding the population correctly. Sometimes you even need to profile your population, and after doing profiling you will do the sampling. I never used any AI tool for profiling. We generally, sometimes on the Excel we use nth item, so every 10th item is picked up like that. That is something statistically uh, proven. So we we do not generally do that. In most of the cases nowadays there are separate data analytics team which look for, do the proper profiling of the data analytics. They will see any entry posted after 12 o'clock in the night, any entry posted say on the holiday, anybody who is not authorized to post any entry but has posted any entry, any items which are above PM or materiality. These are some of the fields which are used to pick up the samples.
Okay.
Yeah.
So yeah, correctly answered.
Mm.
And I feel that yes, high risk general entries are really important to test, and we
Mm.
should be ensuring that the population, which Sir mentioned, that the
Yeah,
population should actually be complete, and it ensure the accuracy and the consistency and the samples which we are picking, it
absolutely.
should represent the overall population. So yeah, this is one of the thing which is real
Yeah.
important. So going forward, I have one more question. Like nowadays, Indian government stresses on the global south.
Mhm.
Are there any opportunities for the practicing CAs in global south countries?
So for, I would say that the kind of training and the kind of strong exams we are going through, each and every Indian CA has opportunity across the globe. Whether you are auditing US, Europe, I can tell you that all these firms have first started with one single country of US. Now they have practice of Canada, Netherlands, Australia. They are also working for European countries, UK. Then also for the South Indian, South nations like Middle East countries, we are auditing from here. And auditing South Middle East countries is more easy because they are first up adopting IFRS. They are also in the same time zone, so it is more easy. But they are more not more remunerative as the US clients are. So definitely, I think Indian CA are technically, there is no doubt about the capability. Yes, the another skill which is required is a soft skill that depends upon the company which you are working for.
Correct.
Yeah,
Correct. Correct. So, to add on in
yeah,
this topic, we have one more questions which says that, which you just mentioned about the skills. Let's
yeah,
talk more about it.
mm,
It says that what are the key additional expertise required for US audit? Like any kind of AI, forensic, etc. Like if we audit for the AI or forensic audit, and our Indian CAs get outsource work from practicing firm from US, like any practicing firm from US, can we outsource the work?
yeah. So from the skills perspective, for overall an auditor has a two skill sets. One is technical, second is the soft skills. All CAs are technically capable.
Correct.
Soft skills is depend upon the culture and the country which you are working with. We we understand the technical terms very easily,
Correct.
but we need to learn the country specific terms and their way of working, way of style of working. That is something which can be taught or learned over the period of time through trainings or working with them. Definitely working. Initially, when I joined, I have worked with, I have done my articleship from Indian firm, so their different culture was there. Most of the focus was like in the last 15 days, you need to finish and test everything.
Yeah.
Whereas US audit engagements are more planned. They try to complete their 50-60% within interim itself, and then over the year end you focus on only 30 to 40% of the engagement. So that is something shift in the culture. Then the timing process is different. The you need to plan your day in such a way that at the end of the day you are ready for the call. You are within half an hour you need to communicate what you want from your client, and then need to send your open item list. That is something which is not there in the Indian audit scenario. You are sitting in the front of client, you are sending email, you will get it, but that
Correct.
doesn't happen in the US. So that is something you will learn with the only when you will work on the job, and also you will can learn through the client. The second part of your question was like, can we get work from the sorry,
Hmm.
CPAs in the US?
Hmm.
So see, we all need to reach out to our counterpart. There are two counterpart. One is the direct client, and second is the CPAs in the US. And you need to build a rapport and trust with them that you are capable of doing work. And the most important part in the initial challenging part is the security of the data. They are, even the US client are not trusting the US CPAs initially. They have built their repo over the across the period. So you might start with the initial known confidential data work, and then slowly you build a repo with them. They'll start sending you more work. It is possible. I myself have done that, and I think many people are doing it. Only building repo. And also, there are many people who have invested in firewalls and data safety and security. Sometimes they also work through VDI, virtual desktops in India, so that they are working on the client systems where there is no access to download the information and then complete the work. So these kind of also arrangements happen.
Okay, yeah, of course, this is there.
Yeah.
And so let's focus on the practicing CAs. Like
Mhm.
we generally see this that after completion of CA, like there are few people who opt for the practice, and there are few people who go directly with some companies who get absorbed in the job. And yeah, let's focus on the practicing CAs. So one of the question we have is. For the practicing CAs, we have this like can work from the US and other country LinkedIn or association with existing CA work like this. Like, can they connect directly through the LinkedIn portal to the CPAs who are working offshore there.
Absolutely. In fact, I started with that only. When I started my
Yeah,
own firm, I reach out to my connections in the LinkedIn that but the thing is that you need to also look into the size of the client you are approaching.
correct.
So if you have previously worked with the big engagement, they are not going to send you directly in one day. If you have worked with smaller engagements, they will probably trust you and they'll send you with that. So you need to check your networks who can trust you, and that is the best way. You might get a lot of work from the CPAs there rather than getting directly from the client. So approaching CPAs there who are dealing in audit, and believe me, trust me, there are not many CPAs who are doing
Mhm.
audit there. And those who are doing audit, they have set up their practices in India already, those who are big brand name. Only people those who are dealing, like many people are working on NGO audits, many people work on private clients, those kind of stuff, still they are not able to find resources properly time, and you can go to those clients and CPAs that you have relevant expertise and experiences, so they can approach you.
Yeah,
Yeah.
of course. So one more question, that how audit can be automated using AI. Like, of course, AI supports us in many ways,
Mm.
and I believe that it reduces a lot of work. And just like you said about the sampling, we have tools, we can leverage that. So directly, if we ask, like, how audit can be automated through the AI.
So there are, see, more than our risk assessment, our time consume is a documentation. And documentation something which can be centralized, standardized, and automated. So
Correct.
if you do all three of these, like you have ROM templates, risk assessment of material misstatements, you have control testing templates, you have walkthrough templates. All these, if you invest in and standardize in them by AI, these can be automated. Absolutely, there can be programs that I want to select these risks. Please provide me the substantive procedures and the control testing steps. You can automate that, and many companies, especially the big fours, are investing in them, and they have already invested so much that
Correct.
now their recurring cost on these is very less.
Correct.
However, AI cannot replace your professional skepticism and professional judgment. That
Of
can never be replaced. And
yeah.
with the knowledge and expertise and experience, you will always gain it. And I will also request that even if you are using AI for professional judgment and skepticism, do review again. Do not rely that unless until it is having a proven track record of that.
Mm.
Yeah.
Of course, of course.
Yeah.
So, if we think like, yeah, we are auditors and we should be focusing on documentation, independence, like these are the words it's in our DNA now.
Yes.
So, can you just explain that how independence of audit is similar when it comes to the Indian practice and the US practice? And when it comes to the independence, there is another thing, like, of course, every task is associated with a fee. So the payment of the fees is similar when it comes to the US fee as compared to the Indian fee we are getting.
So independence is hampered or have risk through relationship.
Yeah.
Relationship can be of two types. One is financial relationship, another one is non-monetary relationship. Financial relationships, you can have a trial. Non-monetary relationship, you cannot have a trial. In India, right now, the still even at this era also, the legal system is not as vast as US.
Correct.
People look into your face, they trust you more, and they give you job more. In US, it is not like that. The moment somebody identifies any fraud or any errors or something goes wrong with the client, the first thing they look into that what was auditor was doing. And even if you find a small thing which can hamper your independence, it might be relationship with the client, investment in the client, you won't believe that you are auditing in India, your client is in US, still your independence is more important for the US. I'll
Mhm.
give you a simple example. You are working on a client which is an investment giant in US. Okay. That investment giant has a joint venture partner with the Indian giant.
Correct.
They started a mutual fund. Okay. You invested in that mutual fund and you are auditing the US giant of here in India. Independence is impaired. So in such a situations, across the border relationship are also impacted. So my thing is that independence is the most important thing when the people have knowledge. Right now people in India are not as much as aware about the independence which is there in the case of US non-monetary relationship are more complex, and you will see and laugh that the kind of issues which have brought up in the US media about the uh, about the non-financial relationship which has made headlines in the newspaper. So those kind of things you don't see here, but yes, still financial relationship like uh, previously we have seen that only one single client you are getting 90% of your revenue.
Mhm.
These kind of things and standard were never challenged, but now they are also coming into picture. Specifically when in a public company is involved, those get news into that, and we need to address those.
Absolutely.
Yeah.
So yeah, I think that this answered the question,
Mhm.
and a few more on the queue.
Sure.
So if someone wanted to transition from traditional Indian work to global audit work, just curious to know what steps would you advise in terms of both skills and credentials?
Credentials are developed at over the time. Unless until you work on anything, you will not be able to develop your credentials. So you need to build your network. You need to reach out to the people who are working globally, make them your partner, tell them that it is a win-win situation for both of us. You
Hmm.
will you will work round the clock, like they will be working in night, your night, and you will be working their night. That's one benefit.
Hmm.
Second benefit is that when they are heavy, you can support them, and also there might be arrangements of the revenues which can be beneficial for both of them. So
Hmm.
that these are the things you need to market them. The first thing about they will think about the data security, second thing they'll be think about the capability. So
Hmm.
you tell them that first try me with something which is non-confidential. You need to build rapport with that and then carry on that. Regarding transitioning from Indian practice, I think they are more like organized in terms of documentation. They are more uh, professional in taking decisions, and everything is
Correct.
documented. So that is something we need to do more and connect it, build a network. That's the key.
Okay.
Yeah.
Yeah. This answers. Now, one more question. What is the financial year most of US entities follows, and what is the timeline after completion of the financial year by the entities, uh, by which entities we have to complete the audit?
So US follows calendar year, which is January to December. And after December, generally by 45 days, you need to sign the audit opinion for large escalated clients, and 60 days you need to sign for the non-escalated or normal listed clients. You need to sign it. And public clients, you can sign up to within 3 months. Generally, you could complete your works. Most of the hedge funds, private equity funds, they do not have the calendar year, so they generally distribute their uh, time from May to June. During that time, they complete their work. So that's the timeline.
Okay. Um, I feel that
Yeah.
this is correct, that they have a different timeline when it compares to the Indian auditing. So let's talk about the payments. So one question, interesting one, which arrived is, if the payment is made by the same person whose books of accounts are audited, definitely independence is impacted. It has been found that many times we the auditors are unable to give the adverse opinion because, of course, due to the competition, they want the same client to happen the next year. So it's completely of the independence which is getting affected, and how they can tackle this.
So I assume payment means the payment of the fees you are talking about.
Yeah, I
So
believe the same.
if you have dues related to the audit or the reimbursement of the expenses, that doesn't hamper your independence. However, you might have seen that even you should recover those payments within a reasonable time. If those are outstanding for longer than what is the reasonable time, then it might impact your independence. So make sure that you also follow up with for your fees from the time. And regarding signing of the financials for the US entities from India, you can do only if you are a licensed CPA. So
Hmm.
you cannot do a signed audit from here, but you can do audit work from here, for which somebody else who is a CPA in US or in India can take responsibilities. Yes, this is a practical situation of getting payment from the client in India, but I can tell you that many of the US clients are very time, they make their payment on time. So I don't think that might be a situation in case of US. The bigger challenge is to get the client is a more bigger challenge.
Absolutely,
Yeah,
absolutely.
yeah,
We have good competitors here.
yeah,
So getting the client is in itself is a challenge.
challenge. Yeah.
So going ahead, when we talk about the independence, so
Mm,
independence need to be checked for individual auditors or relatives. It is one of the questions which had been asked,
mm,
and definitely it have impact on our or daily auditing.
mm.
So the question is, independence need to be checked for individual auditors, or it is required for the relatives also.
So there is a definition of relative within the CA ethics manual. Your close relative are not supposed to have any financial interest in the client. Your close relative might be your spouse, your parents, your siblings. They should not have it. And in US, if you see the financial interest of a partner, audit partner, and the audit manager is tracked in a system. They are supposed to update any financial holdings, bank account, credit cards, wallets. They are supposed to give their declare their financial interest each and every relationship into a system which is tracked and with the list of the clients of the entity or CPA firm. So if you are holding any restricted entities shares, you will never be allowed to work on that client. Or if you are working on client and if you hold it, then there might be actions which might be taken. The disciplinary actions might be taken, and that's why I was telling that the biggest challenge which I foresee is that people are working on the global engagement, but are they really following the independence from India? They,
Correct.
when you have the, if you see, most of the insurance companies have joint venture tie-ups in India. Most of the mutual funds are having tie-ups in India. Many of the banks have branches in India, and so we need to be very careful that we are doing maintaining a list of our financial interest and not providing any service to those affiliated clients.
Correct. So uh, we have just one last question, and it is from me, sir.
Sure.
One of the area which is of keen interest to me, like we have studied Indian auditing, and definitely you shared the links through which we can get updated through the US accounting standards. For those who are working for 8 or 12 hours, it is difficult to study over the online screens. So, can you share some books or resources which you can recommend for an Indian auditor to master the IFRS or PCAOB requirements? Any book which you suggest?
See, I personally read when there is a requirement.
Okay.
But this is something which you need to make in your habit, that even you read at the time of requirement.
Yeah.
Even if you are reading at the time of requirement, that will last long in your mind. And also, audit is something which is common sense.
Yeah, of course.
You are testing somebody's books of accounts. You need to apply, always have a questioning mind that whether whatever I am trying to do is meeting my objective or not. That is first thing you need to keep in mind.
Correct.
Second thing is that wherever you have doubt, do research. Now, for research, you have either accounting standards, you have auditing standards, or you also have the similar types of clients or previous years of the same client. These are the resources where you go it.
Correct.
The last thing which you do is consultation. Consultation from your seniors and peers, you can do it.
Correct.
Yeah.
Okay.
So
Yeah.
I generally don't read books on specifically on the relevant materials, but I think the best you guys can do is read read the account summary memo, ASM, of your client,
Mhm.
and APM, which is audit planning memorandum. These two are very good memo. Once you will read that, and also try to read significant risk memos in your file, they will
Okay.
give you insight, and you will be surprised that the kind of documentation which happens in US is amazing. Is they will first identify, there are steps to document the memo. First, identify the issue. Then, what is the relevant guidance and
Mhm.
regulatory body?
Mhm.
Then, what are the options available in the regulatory guidance? Pros and cons of the options, and which options you can select it, and what are the challenges you might face in. So this is the model of we call it a professional skepticism model, which we use in every issue where you can read it. uh, I do not have answer of the book, but yes, these are the things which I follow.
Okay, okay. That really supports a
Yeah,
lot.
yeah.
So thank you, sir, for all the great knowledge. As we draw this truly insightful session to a close, I would like to take a moment to reflect on the wealth of the knowledge and practical guidance we have received about the global audit practices. Thank you, all the participants, for all the questions you have with us. Today's webinar has made it abundantly clear that the world of auditing is not only evolving rapidly, but is also brimming with new opportunities, specifically for those willing to expand their skill and embrace international standards. So let's quickly recap the key takeaways from today's session. So, from the global prospect, we saw how Indian accounting standards will, while rooted in international practices and frameworks like IFRS and PCOB standards, when it comes to growing the demand, with every question, we saw that yes, the profession is experiencing increased demand thanks to the technological advancement, regulatory complexity, and globalization, opening doors for Indian auditors domestically and globally. From importance of independence remains the cornerstone for reliable audit opinions, thorough and timely documentation, as mentioned by Sir, as practiced under both Indian and global regime, is critical in sustaining a quality audit work. So, finally, as chartered accountants, we all know that we are playing a vital role in guiding the business through this journey, ensuring compliance, optimizing structure, and enabling the growth in one of the fastest growing economy of the world. I thank you, all of you, on behalf of everyone attending today. I extend our heartfelt appreciation to the ICI team for organizing this platform and driving knowledge sharing sessions for all our professionals. A special thank to CA Abhay Chajirji for his ongoing commitment to the professional development of CAs through his leadership and support, and for providing us the platform to discuss the global scenarios. Most importantly, our sincere gratitude goes to our speaker, CA Yogeshji, for the depth and clarity he brought to today's session. Your expertise and enthusiasm for demystifying the global auditing standard has left us all better prepared and inspired. Thank you to all the attendees for your active participation, thoughtful question. Remember, each question was interesting and important for our profession, and the eagerness you all showed to stay ahead in this ever evolving domain. This is Ankita Mandal, Auditor, KPMG Global, wishing everyone continued success. Let's keep learning, let's keep growing, and leading the way in global auditing. Thank you and have a great day ahead.
Thank you, Ankita. Thank you,
Thank you,
the
sir.
ICI team. Thank you so
Thank
much.
you.
Yes.